Good morning. Welcome to the mortgage rate forecast with Scott Criss. It's June 14th. Let's get going to the charts. Here's what we have. Mortgage-backed securities are trading today right up here at about $102.94. We saw an 18-cent rollover last week. 18-cent rollover, to keep it short and sweet, it's kind of like a stock. You own one stock, it's worth $100, and they split that stock. Now all of a sudden you have two stocks, but they're only worth $50. So coupon rollover is kind of the same way. So even though we are trading at 102.94 and we are a little bit down from my last report, technically we are trading about the same, if not a little bit better, when you take the 18 cents into consideration. So not so bad news for bonds. Our support's coming in below us at 102.75, and we have resistance coming in above us at about $103.10. And here's the reports that came out. Retail sales actually came in better than expected. It's their largest gain in over 1 year. And so not really bond friendly, but we did not break this upward trading channel, so that's still pretty good news for bonds. Business inventories came out worse, better than expected, which was not bond friendly as well. To kind of quantify where we're at in May, mortgage-backed securities were averaging about $102.40, and Freddie Mac, the source is down here, reported that the average consumer received a interest rate at 3.6% at 0.6 points. So with that being said, we are trading about 54 cents better, so the average consumer may be picking up somewhere around the same lines with close to no points. So here's the analyst outlook. Analysts are a little inconsistent on the short term. One of the more conservative analysts is actually going bullish, thinking that bonds are actually going to improve, maintain that upward trading channel. The other analyst, which is a little bit sometimes more liberal, is actually pulling back and saying neutral. We're going to probably see some flat trading. So a little bit of inconsistencies there, but both of them are pretty consistent. They're saying, hey, we don't see any major changes on the long term, better or worse. So as far as my report last week, bonds did meet my expectation when you take into consideration the rollover. So that was a good forecast. And this week, I'm actually going to forecast trading to be between $102.75 and $103.10. So I don't think there's going to be much movement through next Thursday. So I'm going to go kind of neutral on the short term for now. Anyway, that is your forecast, but let us know what you think. You can leave your comments down below. Let us know if you think bonds are going to get better or worse, and let's see what happens next Thursday. And so everything likes to be liked. Don't forget to like this video before you go. And if it's your first time on the channel, up here at the top left, you can hit subscribe. And when you hit subscribe, you'll just get a little alert when Tuesdays and Thursdays when we update our forecast. And if none of this makes sense and you're trying to get a mortgage, you're thinking about when to lock in the interest rate, you want to kind of get a pulse on what's going on with the market with interest rates, but none of this really made sense to you, it's okay. At the top right, you can click the little guy scratching his head, and that'll take you to Mortgage Bonds 101 and just give you some of the fundamentals of how these charts impact you as a consumer. Anyway, that's it until next Thursday. Have a great day, guys. Bye-bye.